Hi, this is Sean Casey from Trade Canary. Today we're going to look at how to buy an option using ThinkOrSwim. ThinkOrSwim is the free software you can get from Charles Schwab. You connect ThinkOrSwim to your Charles Schwab account, and it allows you to do a lot of great things. And we don't have to get in all of those today. We just want to look specifically at how to buy an option and do something that is fairly simple. Buying an option with ThinkOrSwim is very easy, and it allows you to see a lot of the choices for the different options that you might consider on a specific stock. Once you're logged in to your Charles Schwab account and connected up with ThinkOrSwim, you go to the Trade tab. And once you're on the Trade tab, you can put in whatever stock that you want to trade options in. Let's say you want to trade stock on options on NVIDIA. You would put in NVIDIA, click on that. It would change. So is the current stock price. You can tell this is live because the numbers are bouncing around. It also drops down and shows us all of these option chain options, and I'm going to show you some of those in a minute. I'm going to go back to Intel, INTC, and hit that because it's a lot easier for me to talk about this one because it's one that I do actively trade and give you some ideas on it. You can see that there are many expiration dates. This is when the option expires. Currently, we're on Wednesday, February 19th. These options expire in 2 days. See the 2 in parentheses? That's what it means. 2 days, 9 days, 16 days. But we're going to go all the way down here to where we have 695 days until expiration. And there's a huge difference in the cost of an option based upon the time value. For example, if I own the February 21st one, you could see in the ThinkOrSwim right here, how it's shaded. That shows you where the price is currently. The price is just below 26. You can see the line here shows between 25.5 and 26. This is in the money. This is in the money because these are puts on this side. These are calls on this side. Okay. And right now we can see that to buy an option for 26, somebody wants 68 cents or 66 cents. It keeps moving, of course. If I go out a week to February 28th, one more week on another Friday, all of those normal stock options expire on Friday. You can see it'd be $1.14 right now. So 48 cents difference to get another week of opportunity to enjoy the stock move. If I go all the way down to January 27th, long time, this is almost 2 years from now, that's saying if I want to buy, I can't buy a 26, there's only a 25 and a 27. I could buy a 27 strike price option 2 years from now for $6.90 right now. See a big difference, but that's a long time for the stock to move. The longer you go out, the more opportunity you have that the stock moves in your favor, but not quite as much leverage for how fast it's going to move. Also, if you notice right here, it says POS. This stands for position. This is a position that I currently have in Intel. And when you have a position, you're going to be able to open this up and look at it and see where your position is. In this case, you can see this is at the April 17th expiration date at the $25 strike price. You can actually go over here and click on this, and it will show me the trades that I have that got me into that. This was from, about 3 weeks ago. I bought the 25 call. I have 50 of them. I paid 41 cents. Currently, it's $2.74 for each option. And they show you the total gain right now is $11,641. So you can see your current position. This also comes in really handy because when you go to sell, you can look at this and sell it. But let's say that I'm looking for a short-term move, just because we've got to show you something to finish this video. And I'm going to go and say that stock's down $1.50 right now, but I think it's going to bounce over 26 on my pretend thing. I can right-click right here on this price, and I can click buy. And normally you're going to click single. There are a lot of advanced option strategies. We're not going to cover those here, but I can just click on single, and this order entry window will open up down here. I know that I'm buying because it's green and it says buy. If I was selling, it would say sell and it would be red. A very good double check for you. Saying that I'm buying, it's going to show that there are 10 units. You could also do different percentages. If you had a position you were selling, you could do a specific dollar amount and get as many as you can for that dollar amount. I really like just using the units, in this case, the contracts for the options. Every contract is worth 100 shares. It trades on 100 shares. So if I bid, in this case, 66 cents, then I'm paying for 100 shares, $66, right? One contract will be $66. And you'll see the total pricing in a minute. The effect auto normally is the default that I always use, but this one in this case would be to open a position. It's not to close because you don't currently own the option and you're not selling it, or you haven't sold it short and you're not buying it back. So auto is good. The system really gets it right pretty much all the time. My expiration date is 2 days of February 25th. This is going to be a very fast moving price. And we can see that this is Intel. It's a 26 strike price. It's a call. And up here, you can see it continues to be highlighted where I had it so I can look up at it. They default to showing me that I'm going to pay the ask price of 66 cents, but I can set my own limit price. And I think it's going to come back a little bit. I'm only willing to pay 62 cents, let's say. And then I choose the type of order I want to place. It defaults to limit order. Limited always a good choice because you're only going to pay the 62 cents or less to buy that option. I can buy it at the market, which means it would give me the best price that they could currently get, but that might not be 66 cents or 65 cents. It might be 70 cents when that order hits the market. I might get a big surprise. It could also be a good surprise, but oftentimes it's not a good surprise. A stop order says that I only want to buy the option when it reaches a certain price, and then I want to execute a market order. Normally, if I'm going to go backwards and look for a lower number, this is still at 64 to 66 cents. I'm bidding 62 cents. There's no reason for me to say when the option gets to 62 cents, I want to pay the market price, right? I just would really like to pay 62. Doesn't make a lot of sense if I'm going down. If you're an aggressive trader and you want to trade the momentum on the options, which means that the momentum would be going up, and I say, look, unless this starts to come back, I don't want to buy it. But if this option bounces up to, let's say, 70 cents, then I want to buy it because I believe that it's going to go higher once it rebounds and goes the other way. So a position you could take is, I don't want to buy this until it starts to go back up. But when it does and it hits 70, I'm buying it. And then I'm going to look to get a run past 70 and go back higher again to get that price. So that's one way to use the stop. Related to that, the stop limit in buying says that, look, when it hits 70, I'm willing to pay a specific price, and you can change this price to whatever you want. It could be that you're willing to pay 70. You're not willing to get stuck at the market. Maybe you're willing to go to 71 cents in case, just to make sure you get filled on that momentum trade, but you have those options. This is obviously a more complex order. You also have the opportunity to create a trailing stop. This is extra complex. It's complex enough with stock, but it's more complex with options, where you could decide that I don't want to pay the current market, but I want to pay only if the stock does certain things. In this case, that it backs up, or the option backs up 10 cents from its current price, which was like 65 cents when we just looked at it. And the 65 cents drops to 55. And at that point, I want to buy at the market. But if the stock is moving up and the option follows it upwards, this might go up to 80 cents. And then my trailing stop order is 10 cents behind that. And I'm only going to buy if it goes up to the 80, comes back to 70. This obviously gets very complex, especially with options and when you're trying to buy. And its trailing stop limit is the same concept, saying I'm going to trail by 10 cents, and then there's only a specific amount still I'm willing to buy for, and you're going to have to keep changing. That limit is set by you and would only change when you change it. You can see how this can get complicated versus just buying at a specific limit. You could also buy whatever the market price is when it closes, the market closes it for, or a limit that you say, I only want this price or better at the market close. If it's not, I don't want to buy it. Let's keep this simple. Stick with a limit order where we're saying we're only going to buy this. Let's see, looking up at it now. Usually when you go to buy an option, right now you see it's between 63 and 65 cents. Usually we'll execute right in the middle. If you're looking to just get the trade done, I can put 64 cents in. That would probably execute right now and complete the trade. Doesn't mean you have to pay 64. I could put in 60 cents and let's do that. Just look for a little pullback and a little bit extra. And when I do that, I have a choice of how long this order will be good for. My first choice default is that it's going to be good just for today. This is, of course, a very short-term option. I wouldn't place the order longer than that in this case, but you also have the option to make it good till canceled, which means that this order will stay out there until you cancel it or until it fills. On option orders, especially short-term orders, you usually don't want to let them be good till canceled when you're buying, because if you're going to get close to an option expiration date, you might buy something that you forgot you had an order for. So don't do that, please. But right now we're going to make this good for the day. We're looking for the fast move. I'm going to click on confirm and send. That's going to get me this order confirmation window. And that shows, first of all, see the highlighted green, that I'm going to buy 10 Intel calls. They represent 100 shares each for February 21st expiration, 2025, $26 strike price. It's a call, and I'm looking for 60 cents is the limit. That's the max that I will pay for this. And I'm going to open my position by making this purchase. It'll show you the break-even stock price. Currently at $26.60, we would break even on that purchase. Max profit is infinite. The reason it's infinite is that if this stock goes to 100 while I own this option, I get all of the profit above $26, right? Because I could go buy the stock for $26 with my call option, and then I could turn around and sell it for $100 and make $74 a share. That probably won't happen in 2 days, but there's an infinite profit. My max loss is $600. The $600 max loss is because I'm buying 10 calls for $60 each, right? 100 shares in an option contract. That's 100 times 60 cents is $60. And then I have 10 of those, so it's $600 plus the cost of commissions and fees. $606.61 is what I'm going to pay. It's going to reduce my buying power by the $606. That leaves my buying power for stock or options in this account right now at just over $9,000. If I'm ready to place the order, I would click the big green send button. If I want to save it for future use, I could click on save. If I click on edit, it'll take me back to this window down here to edit, or I can click on delete and the order goes away. If I click on this to place the order, and then I don't like the order, I want to change my mind as long as it hasn't executed, then you could go in to the system in ThinkOrSwim or Charles Schwab, find the order and cancel or replace that order so that you're not stuck with something that you're like, oh my gosh, I made a mistake. And you can very quickly delete that order as fast as you can click a button if there is an issue. Another good reason to buy it, especially if you're new, at a limit or sell at a limit that is only the numbers that you really want. This is how to buy a stock option using ThinkOrSwim connected to your Charles Schwab account. I hope this has been helpful, and I wish you success in your investments.